Okay folks, welcome back to the channel. Here we have a EURUSD case study, right? A trade which I didn't actually take. I was on the sidelines for this trade, but this is a potential EURUSD case study and a fantastic trade, fantastic risk to reward trade that you could have capitalized on last week. So time of recording is the 13th of April, so a few days ago from now. I think it was the 9th or the 10th. You could have caught a really good EURUSD sell trade, right? Using the ICT concepts I'm about to go through. So again, just to give you some higher time frame context, the context of this trade was really to aim for this POI down here. So this was a fair value gap that was unmitigated. So we have a fair value gap just over here that price had left unmitigated, right? So overall, the narrative of this was sells, and the reason why I was selling was to get down to this POI. It's really that simple. So let's now go down to the 15-minute chart. So there was a 5-minute entry you could have taken. And there was a 15-minute entry you could have taken, right? So for the context of this particular case study, we're going to be going over it on the 15-minute chart, and the reason for that is because typically the lower time frame is kept for the members, right? So everything else from the higher time frames and even the mid time frames, such as the 15-minute time frame, is all shared for free on YouTube. I don't really go below that just because, again, it wouldn't be fair on our members, right? But one thing I'll say is the M15 can be used for an entry. You don't even have to go lower than the 15-minute time frame to actually be successful in your trading, and I'm going to show you exactly how, tips and tricks along the way for that, right? So here we have the EURUSD. This was the 11th of April, so this was the 11th of April 2024. Okay, EURUSD. So let's just label that so people understand, right? EURUSD, right? EURUSD. So from here, you want to ask yourself, we're looking for sales primarily, right? So the objective of this trade is to simply key off a fair value gap, right? Everything's about keying off a fair value gap, right? So the entry model for this is quite obvious. What we need to start with is we need to start with an Asian range or an accumulation, like I say, right? This is the accumulation in price, the Asian range, which is a low volume time of day. So this Asian range, which I'm going to label in orange, is what you see on the charts, right? So this here is the Asian range that I've mapped out in orange. So this Asian range is what you see over here. Now from here, what you're looking to do is the secret of this trade is to sell after you've had a sweep of the Asian high, right? So we know that the Asian high is up here, right? This is the Asian high of the markets, right? The Asian high, which represents buy side liquidity, right? So the Asian high over here represents buy side liquidity, or BSL for short. So you want to make sure that you're selling after you've had a sweep of the Asian high, right? So why do we do this, right? We're looking for price to head higher before looking for a break of structure. And we're looking to key off a fair value gap, right? Now this entry model itself was quite unique because we had what we call a two-phase manipulation model. So what do I mean by that? Again, we had the Asian range over here. So the Asian range builds liquidity, right? The Asian range builds liquidity in the markets. And so from here, what we had our first manipulation pre-London, right? So our London session is UK time. So this is UK time. Your London session is going to be from 8 a.m. to 10 a.m., right? UK time. So I recommend wherever you are around the world, please calibrate this to wherever you are around the world. Our first manipulation was a bearish manipulation over here. So we saw a sweep of the Asian low to begin with, right? So prior to the London Open, we've seen a manipulation to the downside, right? We've seen what I call in the community manipulation phase one. And this is a bearish manipulation. It's a bearish manipulation simply because it went lower, right? We see a bearish manipulation, price seeked lower prices, right? So if we just take this to the model over here, what we need to understand is that we've had a sweep of sell side liquidity, or the Asian low. So we've seen the Asian low get swept, and you want to ask yourself, what is the purpose, right? What is the market seeking to do with this move? Why does the market move like this? So the reason for it is simply because, right, this manipulation over here entices early sellers into the market, right? So this here entices early sellers, right? Early sellers are enticed in this region, and this is the reason, this is what the market achieves from what I call manipulation phase one. So this is one of the entry models we teach within the community, manipulation phase one. So now you want to ask yourself, you want to buy above the Asian high, like I said, right? You want to wait for a sweep of sell side and buy side liquidity. So you could ask yourself, well, liquid FX, why didn't you just trade off here? Why didn't you key off a fair value gap over here? Yes, that would have resulted in a loss. That would have resulted in a very annoying loss because price melted after that. Good question. So the secret to this is time. Time is very important, and time actually comes before liquidity, right? I'm talking about liquidity, talking about manipulations, but the concept of time is incredibly important, right? One thing that you should understand, right, intuitively as traders, that we've had wicks over here, right? So we've had a wick over here. So what I'm going to label in red over here is quite a wicky price action over here. Just over here, we see long wicks to the downside, long wicks to the upside, right? These wicks all occurred between 1 p.m. and 2 p.m. UK time, right? So this here was what we call the red folder news. I think we had Euro news and USD news that day, right? This is the Euro USD, so it's going to be extremely volatile during this time. So the secret when it comes to identifying the M15 entries is to trade after the news events. I'm even going to write that over here so people remember that, right? Top right-hand corner of your screen, or just above, trade after news events, right? Very, very important. Trade after news events. And the reason for that is because you do not want to be trading in an area of volatility where you do not know the potential direction of that volatility. It's very, very important. You do not want to sit here and predict volatile news events. You want to trade in line with them based on the direction they give you. So it's important to understand, right? We actually had a lot of manipulation during news, and during news we often see a lot of manipulation, right? So you want to be looking for the Judah swing, and ICT Judah swing is the highest point of the day in a bearish market, right? So this is that Judah swing over here. This is the Judah swing. This is the final buy side manipulation over here, not this, right? This is not your manipulation, and the reason for that, the reason why this is not the Judah swing is simply because we had news events coming out afterwards. So a key tip is if there are news events, you want to be looking for a Judah swing after the news event. So let's get rid of this. This is the correct Judah swing over here. And the reason why is simply because it's after news events. So we're understanding, we're placing a heavy emphasis on time before price, right? Time before price. Very, very important. So going back to the schematic over here, we've seen a sweep of sell side liquidity. So early sellers have been enticed. Those early sellers, of course, get swept out, and now we've entered after we've had a Judah swing, right? Post news events and post an Asian high session sweep, right? So this here represents the high of the day or the Judah swing, right? So now from here, our job is to understand we have a Judah swing, and what validates the Judah swing is that we have a clear shift of structure over here. So this arrow represents a break of structure or a shift of market structure, MSS. Market structure shift, one of the most important concepts when it comes to validating your Judah swing, right? So what we have over here is exactly the same. We have a Judah swing up here, and we have a break of structure to the downside, just like this. Now from here, when we enter off the markets, what do we enter off? What we're keying off, something I go over in every single video, what we're keying off is a fair value gap over here. So this here was a fair value gap in price. And this fair value gap, I often mark out in blue, represents an area where we want to be trading off, okay? So this then validates our order block. So what makes an order block, right? What are the 3 rules to an order block? Let's go through them very quickly. An order block has to have a clear break of structure or a shift of market structure or a market structure shift, MSS. That's the first rule. The second rule, like I've just identified, is that we must be trading or keying off a fair value gap. No fair value gap, no order block. And the third rule we're going to be keying off, and I'm going to teach you how to use this just now, is a concept of a PD array, right? So what do I mean by a PD array for those who haven't seen my content already? So a PD array very simply gives us the projection of the equilibrium with respect to the high and low of the current dealing range, right? So that's a complicated way of saying it, but basically we have a swing high up here and we have a swing low down here, right? So this here is at 50% level or the equilibrium. We want to be selling above the equilibrium level in price. Very, very important. So we have a fair value gap, a break of structure, which I'm going to mark with MSS, and we have a equilibrium to trade off, or trade above, sorry, should I say, right? So from here, an order block, if I label this out for people, an order block is very simply going to be this candle, which is the candle before the inefficiency over here, right? So this is your M15 order block. So order blocks I label in gray, just like this. Oh, wrong color. So order blocks I normally label in gray. So this is an M15 bearish order block, right? M15 bearish order block just over here. Now from here, of course, we key off the order block. A safe place to keep your stop loss will be above the Judas swing or just at the Judas swing. And so from here, we had a fantastic trade. As you can see, price melted in line with the daily time frame, giving us a nice 1 to 2 or 1 to 3 trade, right? Price really melted from this region, right? So if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.